Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, and see what people are sharing on here. And again, if you want to follow me, finding_finance and finding-value.com, where you can find our community where we dive deeper into all of this and look for potential investment opportunities. I share everything on that website, my portfolio, maybe not my account values, but my holdings, what I'm buying, when I'm buying it. You can see my everything on there. We do have a coupon code special going on right at this moment, and it is special is the coupon code. Look at the description link for the discounts. GSG says WTI $12 undervalued based on current market price and latest EIA weekly data. So we are still $12 undervalued for oil versus the dot plot and commercial inventory levels. So I continue to go over this because this is a big deal. Inventory levels drive price. Now, some people say, well, how come we're not driving the price right now? I think it has to deal with the spare capacity that Saudi has. So everybody thinks that we've got enough supply, and I would say we don't, because we continue to hold only steady during a build season. So we're not building inventories, and if we continue to eat through inventories, that will have an impact on price. We're going to eat through the spare capacity that the Middle East has, and we are going to go higher. We have eaten through Dukes, drilled uncompleted wells. We are low on the strategic petroleum reserve, and we need to start drilling again. The oil price is not high enough for drilling to occur. In fact, it is destroying the drilling. We are pulling back on rig count. We are pulling back on rigs that are offshore. We are not drilling with the same intensity as before. And I think there's a standoff between the paper traders in America and Middle East OPEC supply. And they're going to battle it out until basically they're going to starve inventories until the price goes up. That's what I see. I don't care who the paper traders are. It could be Trump, it could be the Federal Reserve, it could be government trying to hold down oil for a stimulative measure. But it's too low right now, and companies are laying off people, oil companies and oil service companies, and it's too low. The gold to silver ratio is at 89. Traders are noticing this opportunity in silver. Yeah, I do notice it. Now, this is exactly what I watched the entire time. Gold's gone up a lot. Silver's kind of lagging behind it. Some people think that the strength in gold will continue and silver won't catch up. I'm in the exact opposite camp. I think silver's about to just absolutely smoke it. And I also think that platinum's about ready to break out with oil. Those are also very closely correlated. So who's going to win here? I think gold and silver in the short term are going to rip, and then platinum's going to come right behind it when the money and liquidity comes through the system, and you're going to see oil and platinum run together. These guys will run right before it, which they're doing right now. EIA crude, we have a build of 4.6 million, Cushing 1.5, gasoline a draw of 0.151, and distillates a draw of 2 million, which is the heavier stuff, diesels and stuff. So yeah, a little bit of a build, not too big. Christopher Aaron says they're throwing the kitchen sink at silver, trying to keep it under $33. When that gives, this thing blows. Totally agree. And it blows in a good way, is what I mean. So yeah, we can see the lows are coming on up. It's going to blow here. It's going to rip. Grady says, this is commodities TA cycles. This is the kind of quality you can expect at the service. Clean, clear, to the point technicals with huge value. Let's go back to here. So this chart is now backtesting the blue, huge support trend line. Note what happened after the last big blue breakout. 1,250% breakout here. That's what's coming. We have a breakout and it's ready to rip. He posted this December 23rd, 2024. Forget the nonsense from the uninitiated analysts talking about miners not being the place to be now. The metals and the miners is the right place to be now. Gold and silver is the counterweight versus the defended global fiat monetary system, and it is dying. So it should be obvious not to expect this bull to be easy. As said many times over, expect it to be hard, very hard. And do not get disappointed, i.e., emotional, understand it instead. The volatility is going to increase hugely as the present monetary system dies. To get through this and get out the other side in one piece in the best way possible requires the best guidance there is. There's the big move that we are experiencing. Coming down, we've got if the gold is not there, we are going to be very upset, says Donald Trump. Is the gold going to be there in Fort Knox when they do this audit? I don't know. I'm curious. I don't know if it's going to be there or not. A lot of people say, "Oh, we don't have the gold." I have no idea. I have no idea. And maybe that's why they're scrambling to get all this gold back um, in the vaults there. So maybe Donald Trump spoke with the banks and said, "Guys, get your shit together. Get the gold back here. I don't care what it takes. Get it back here now, and then we're going to do an audit and audit it." And now everyone's scrambling, and they just went over to LBMA to go get it. That's probably what happened. Katusa Research says there's a lot of runway for both gold and silver over the coming years. It's 2025 and money can move fast. Here's the market cap of the global gold and silver industries. 432 billion, 97 billion, Tesla. These are individual companies. Tesla's a 1 trillion market cap. US oil and gas industry in its entirety is 1.5 trillion. And I hate to say it, but the oil and gas industry should be way bigger than cryptocurrencies and Apple. Way bigger. This should be like 10 or 20 times bigger than these. Why is that? Because this is what runs the entire world. Our modern industry is based off this. But, let's go buy some intangibles. That's where we're at in the cycle right now. These are the intangible assets, and this is what's going to come up behind it any second here. We're going to be ripping. Breakaway futures, dry bulk is up 6% for Capesize, Panamax up 3%, and tankers are down 2% on both VLCC and Suezmax. Another one from Grady says, seeing many arguing that precious metals miners are no good just because they are sometimes lagging the metals. That is not very useful information, and repeating that endlessly shows that one does not understand the miners or the big picture charting. Just like with the metals, playing miners is all about timing. Many are worried about the miners are not outperforming metals big yet, but it is not unusual for metals to take the lead up from the big lows. And when the wall of worry really lets go, we will see 8 to 10% up days for GDX and 10 to 15% up days for SILJ. A true generational opportunity continued with the gold 8-year cycle low back in 2022, called it in real time. The miners bull will evolve in stages. The third stage for miners, up from 2022 lows, started 1.5 months ago. The commodities bull market started 5 years ago, which is 2020, called the bear market low. I happen to catch the low too, which is back here. And here we are. We've broken out of the big long-term downtrend, and we are coming at lows here. What would I do? I would buy the living crap out of it. Me personally. Not advice. This is a huge opportunity, and it's cheap. The guys who are early know what they're doing. They have conviction. They've got an idea of the big picture. They can see the whole damn thing for what it is. You could look at currency exchange rates. You could look at the DXY. You could look at the real estate cycles, the Kondratiev wave cycles. You look at everything, piece it all together. That's how you get the low entry points. Look at the fractals. The fractals are repeating patterns that happen over and over time. The fractals are bottoming here. It's the opportunity. The opportunity. Gold's running. GDX just broke out. You think that's going to go down? No. Heck no. This thing is it. We are here. This is it. So I'm ready. I'm ready for this, man. I'm ready to go. Coming on back, we've got Rock bottom entries. Silver's headed to all-time highs. Don't lose sight of the big picture. Totally agree. Path of least resistance is up. Shoulder, head, shoulder. We're breaking. It's already broken, guys. It's ready to go. Like we are just starting to start our first stride here. Gold has made new all-time highs yet again today. Silver's broken the 32.77 level. Been saying gold 3,000, 3,300. Silver 40, 45 bucks is next. After that, gold 5,000, silver 100 is coming. Many have missed the big move so far, as usual, and especially the up move during the last 8 weeks. This is why the dips have been bought and pullbacks have been non-existent. Dips have been FOMO bought right away by folks missing the move, which has stopped a normal daily cycle decline to happen so far. Most have, unfortunately, as usual, been listening to attention-seeking narratives about an impending stock market crash, constant talk about metals manipulation, and the USD going to the moon, instead of looking at price and understanding what is actually happening. Always remember that most have to be at the wrong end of sentiment at major turns and levels. Always, including all analysts and services. Plus, one cannot play a resume bull very well with a bearish mindset, or lack of the right tools or experience, or lack of the right guidance. That's why most missed the lows. Many called a top way too soon. Many called for ridiculous low numbers, plus bailed to get in lower. Only looking at the last 8 weeks, it has become clear to many that it is vital to follow the right people. This is what I've been saying all along, and is vital for the bull market that you get the best guidance there is for many reasons. And there's gold spot price ripping to new all-time highs. Here's Bald Guy Money. He says silver price has to adjust to reality if this persists. Imagine how big the deficit will be if physical buyers return to the market. This is your silver surplus deficit in million of ounces. So supply minus demand, big deficit 87 million in 2019, 300 million in 2020, and we're running 160, 138, minus 142, and minus 265 over the previous years. They're all running deficits here every single year. And I think the projected deficit of 2025 is something like 400 million ounces. I think somebody said that somewhere. So guys, price has to go higher for running deficits and eating through inventories. Here we go. Let's rip this thing. But that's where I'm going to end it, guys. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. And that's all I've got. So we'll catch you next time. This is Finding Value.